Well, the February inflation data is in and it's not pretty. We're going to get into it today. So it actually went up a point, right?
Not a point, like a tenth of a
A
point.
tenth of a point.
Yes.
Okay. That's so much
6.4 to 6.5.
better. Yeah.
What was crazy was we were seeing 0.5% drops
We were.
for almost
yeah.
3-4 straight quarters. So
Yeah.
that's kind of what they were hoping
Yeah.
would happen. But we have added over 500,000 jobs so far
Yeah.
this year, which is like totally unexpected.
Yeah.
And now with the bad inflation data,
Mhm.
it's going to cause the Fed to have to react and raise interest rates again. And we kind of knew that they, like the what we've been telling you guys all along was they'd raise it another 0.25% in March,
Mhm.
and then maybe another 0.25% in April.
Yeah.
They might have to do a half
Yeah.
and maybe even a 3/4
Dang.
raise. So what is that going to do to banks? What is that
Yeah.
going to do to interest rates? And what is that going to do to our real estate market?
Yeah,
home
that's,
prices.
that's the question. And we were talking about this a little bit earlier. I mean, something very similar seemed to happen in the early 1980s, right? It's very similar. They had to raise interest rates again after they lowered them to kind of combat the same thing. So.
Yeah, and the banks right now, in one aspect, we love them because they've taken lower margins on their loans,
Mhm.
which has kept rates affordable for you guys.
Yeah.
But now we're kind of seeing the consequence of that,
Yes.
and that is that it's kind of counterproductive
Mhm.
because it's now to the point where it's not slowing inflation. So
Yeah, it's not fixing the problem.
yes,
Yeah.
it would not surprise me if the Fed has to raise their interest rate another full point
Oof. Ouch.
to 1.25 over these next 2 raises
Yeah.
to combat that inflation. So what does this mean for the real estate market? What this means is that even though we had a hot
Mhm.
start to the year and a lot of
Right.
buyers came out of the woodworks, it's going to delay the recovery that we were kind of seeing. Prices will continue to stay level or drop
Okay.
depending what area you're in or price range you're in, and it's all going to depend on how high interest rates go.
Okay.
If they go all the way to the 7s, then and they stay there,
Yeah.
you're going to see at least a 10% drop in prices this year.
Oof. Okay.
If they just kind of stay in the 6s,
Mhm.
then I could see more of like a 5% drop.
Okay.
So those are kind of your 2 numbers to look for. And again, how long are they going to stay that way?
Mhm.
If they're going to stay at 7s for 6 months,
Mhm.
for sure 10% is
Yeah.
going to be dropped off price range. But if they only keep them at 7 for like a month, 2
Mhm.
months, then they keep them in the 6s for the rest of the year. I still think a 10% is very likely.
Mhm.
But if they just bleep to the 7s or stay in the high 6s,
Mhm.
then maybe we'll only see a 5% return. So all the buyers out there
Yeah.
that were excited, that got pre-approved, that we're talking to, that now are still like, hey, I don't know, we might want to wait.
Mhm.
Guess what? That's okay.
Mhm.
This data tells you that waiting might be a good thing right now.
Prices could go down more and interest rates could be lower in 6 months, right?
Well, yeah, I mean, it's tough to say on the interest rates, but
Mhm.
we know how you guys you're calculating. If you're going to pay the higher interest rate, you want that rate to be, or you want that price to be lower to help compensate for that extra payment that you're going to do. And so sellers are likely going to have to offer more incentives for rate
Yes.
buy downs, and they're going to have to reduce prices to help compensate for these higher rates that will be coming.
We'll see you guys.